Hi, this is Jack from Alpha Charts with the State of the Market video. Today is December 26, 2020. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you enjoyed these videos, please like and subscribe to my YouTube channel. And also, you can find me on Twitter at AlphaCharts365. All right, so let's start with the SPX like we always do and just get this chart looking right here. All right, so here we go. We had this beautiful little double bottom right here, consolidation period. We broke out, came back, had a couple kind of retests of this area, holding up well. Let's put some moving averages in here. You can see the 23-day EMA is doing just fine. 65 is right behind it. Both are an uptrend. Everything looks good. Moving on to the Qs. NASDAQ, very similar. We had this little double bottom look, came back. We had a quick retest, and now everything is moving higher. 23-day EMA held just fine. Everything looks good. Looking at the IWM again had a breakout of this super important area to all-time highs, literally went straight up. Moving averages are bullishly aligned. I mean, IWM is leading, and it looks excellent. All right, so let's keep going. XLF, right? Let's look at some individual. So XLF is still under its all-time highs, right? Let's go back to the weekly, and you can see these were from the 2007 highs. So this is a humongous base that's what, 13 years old, going on 14 years old. But we're just right below it, and I think a breakout here would be very, very bullish, obviously, for the market overall. And so I'd like to actually drill it down to the IYG, which is the financial services group. These are your big boys, right? These are your JP Morgans, Bank of America, Goldman Sachs, all those guys. And as you can see, is we haven't quite hit these, the February highs yet, but we have broken out of this extremely important area. So this was a failed breakout here. But as you can see from the 07 high, we retested it, broke out, failed. Now we're coming back up again. So this looks like it has a ton of potential to hold this time. And yeah, I mean, as long as the financial services are above this blue line, I think it's very bullish for the financial groups overall. And I think that that it's bodes well for the markets. Let's look at what semiconductors are doing, because I always like to look at semiconductors. On the daily charts, they are just in an uptrend, right? We strong uptrend. It's kind of gone sideways for a couple weeks, but it's just let the 23-day EMA catch up thus far. It could change next week, right? We could get some nasty vertical violation or something, and this would be the next area that I would be, watching somewhere in there. You watching about the 200-ish level. That would be my point that I'd want to see hold, be about 7% pullback. But as of right now, there's no signs of that happening, right? The 23-day EMA is holding, and semiconductors, if they are doing well, chances are the market is doing well overall, and that's what we like to see. So again, just a sideways movement while the 23-day EMA catches up. Semiconductors look fine. Looking at lumber is coming up to a potential area of prior resistance over here about the $83 level. Has a little bit of room to go. It's definitely an uptrend. I think as long as lumber is doing well, again, it bodes well for the market overall. Looking at credit spreads. All right, let's go ahead and fix the chart up. Get rid of volume, and I'll get rid of moving averages too. And as you can see, credit spreads right now, which is IEI versus the HYG, and they are still on moving down. They're trending down, right? As soon as this area gets taken out, hopefully this week, there's a lot of white space down here. we could see, back to 1.5, 1.49, 48, something like that. That would be, again, bullish. Tightening of credit means the market is good. Everything looks good. We saw this little spike up last week and we're like, uh-oh, what does that really mean? And the thinking was, it means nothing, right? It means nothing because we've seen these spike ups every so often, and the market has done extremely well. Exactly the same thing, a little spike up, quickly back down. I think we'll break that area, and it looks like it continues to tighten. Very positive for the market. Let's just look at the VIX next. See, the VIX also kind of, had a little spiked up, a little, double spike here. But it came right back down. 21.5 is very reasonable VIX. We like it under 24.5, 25-ish. And so we're in this good range, good chance that it's going to also fall. If it gets under 16.5 or so, I think that it gets even more bullish. But low volatility, right? That's what this measures, volatility. So that means that we're in a more trending market. That's really what the VIX is telling me, that as this continues to fall, it's more of a trending market. That's, for me, easier to trade and stay in positions and so on and so forth. Let's look at the put call ratio. Equity only put call ratio. So this is not hedging with the indexes or anything like that. This is equity only. And every time we came up to this area, we got like a little shakeout or something. So this was the area, the 0.5 area that I was always watching. And you see we're at 0.67, very healthy. Nothing's overdone. I don't see any extremes going on here or anything like that. So that's excellent, in my opinion, for more of a trending, for more upside to the market. People are, whatever their fear is, right now, I think it's going to be healthy that we're not at this extreme. What I'm saying? They're trying to front run something, or, front run maybe a correction in the first quarter, which may or may not happen. But as of right now, I don't see any signs of that happening. That is down on the put call ratio, right? Looking at the value line geometric index. And as you can see, we're coming up to an important area, about this 590-ish or so. It has some more room to the upside here. So when we get there, we'll see what happens. But breadth is good. That's what this tells me. It's just expanding, and then that's a good thing. And we'll see what happens when it gets to this area. Maybe we will need a pullback. We'll see. But as of right now, there is some white space here, and that looks really, really good. I want to revisit the gold chart because gold is interesting. So look at this. So you have this little inverse head and shoulders looking consolidation area, right? This is a huge pattern, by the way. This goes back, a decade, 9 years, right? Going on 10 years. And so we have the left, the head, and here's the right side, and it's starting to build out. And I kind of put this question mark in there months ago because, I knew this was a big pattern. So it's going to take a long time for it to build out, if it even built out. Well, we have this. Now, this is kind of interesting. Now, again, this maybe it's not the right trend line. I don't know. But if gold can come around and break above this trend line, we may be seeing a new uptrend from a base that gold could be starting. Now, it may hit this trend line and may need another, maybe we're, here, and it may need one more big down, or, maybe we're here and it needs one more big down, boom. And then it would break the trend line. Like you could have put a trend line like this, right? So there's always a chance that we're here and it needs one more big down, and then it can come back up and potentially break it. I don't know, but I am watching this because, and the other one I'm watching is the gold SPX ratio. And I've shown you this chart before too, right? So this is also a bottoming pattern. And just to go to the weekly chart, just to kind of show you the big picture, right? Here's the big picture. This was the big run up in gold in 2011, right? And then it just completely crashed, and now we're basing. So zooming into the daily chart. Now again, this is gold versus SPX. And we're looking, and you see this again, inverse head and shoulder looking pattern. Here's also a trend line that potentially, once broken, could start the new uptrend for gold. Definitely if it gets above this area, but it's definitely what I'm watching. I'm not a gold bug by any means, and I think but if gold is starting to outperform, that's usually not good for equities, right? And then there'll be places to be, obviously, if you buy physical gold or whatever you want to do. But this is definitely something I'm watching, because if we start to see this change and people start going into gold and so on and so forth, and you see gold outperforming, that's something to be aware of. So anyway, so it just, again, gold looks, and maybe just, if it does break out and the chart confirms, maybe it is time to be into gold. We're not there yet. Looking at everything big picture wise, I mean, I see that everything's in an uptrend. Semiconductors are looking good. Financials are looking good. The bond ratio, the credit spreads are tightening up. The VIX is reasonable. We have put call ratio not too overheated. Here's a fear greed index, now very neutral, nothing crazy or overheated. We're showing them, everything's in check. There's nothing, in my opinion, as of today, to be worried about. It's a trending, we got a nice little uptrending market. Enjoy the ride. It won't always be like this. It won't always be this quote unquote easy, right? We know it gets hard. This was hard, right? You better step aside real quick when you came to this area. So that's definitely something to look out for, but we don't, at least me personally, I don't see any of that right now. Everything is looking good. Everything is trending. I think we're in a bullish market. No reason to be in cash or anything like that, in my opinion. If we start seeing vertical violations and we lose 300 on the Qs, that's a different story. That's only, but we could retest this area again. That's a 3% move. No big deal. But as of right now, everything looks good. So enjoy the ride. Happy holidays to everybody, and a happy and healthy new year for everybody. And we will talk to you soon. I'll probably do a stocks of 2021 outlook video some point between now and next week. Kind of figuring out some stuff, and then it'll be out pretty soon. So look out for that, and I hope you all have a great day.